So, is it true? Is there really such thing as a best currency pair or a best set of currency pairs to trade that will increase your profit potential and in turn make you a better trader? Well, the answer to that is yes, but it may not be in the way that you're thinking right now. And that's what we're going to discuss after the intro and disclaimer is how to create a portfolio of currency pairs that can give you an even better advantage over the market and again, in turn, make you a better trader, which is what we're all about here at the Trading Channel. So if you're interested in becoming a better Forex trader, click that subscribe button to the right-hand side below the video. Click that like button for me. Go ahead and watch the intro and disclaimer, and I'll see you directly after. So what is the point of today's video? Well, by the end of the video, what you're going to have is a step-by-step process that's going to give you the ability to create a portfolio of pairs that give you a better advantage over the market and in turn make you a better trader. Firstly though, let's quickly go over the reason I wanted to do this video. For number one, this is something that has improved my trading dramatically in terms of the accuracy I have in my trades. Number two, this is something that I hardly ever hear talked about here on YouTube especially. And number three, I get this question about as often as I brush my teeth. I'm talking 2 to 3 times a day. I end up getting the question of what is the best currency pair to trade. So let's get started. Let's actually talk about what the best currency pair or currency pairs are to trade. Well, number one, if someone asks me what is the best currency pair to trade, do you think that I even have the capability of answering that question? Is there an answer to that question with it being so general? If the question is, what is the best currency pair to trade? And I tell you the euro dollar, and then you're trading, let's say, a trend continuation strategy on a 1 minute to 5 minute time frame, and on the euro dollar, the 1 to 5 minute time frame tend to consolidate a lot, then is the euro dollar the best currency pair for you to trade? The answer is no. So it's highly dependent. This correlation between the currency pair that's best for you and the way that you trade it's correlated a great amount. So what you need to do is not just generalize the question of what's the best currency pair to trade, because it may be completely different for you than it is another trader that trades differently. What you need to do is analyze what you trade, how you trade. The way we do this is by creating a strategy. Step number one to this process is to create a strategy. You want to create a rules-based strategy that has rules for everything that you're looking for. For instance, we're just going to create a strictly example, very simple strategy right now on the screen. We're on the Euro New Zealand. Let me go to a pair that works semi-well with this so we can actually take a look at some winning trades. This is it's a sample strategy. Don't think this is a strategy you're going to go out and just trade and make tons of money. This is just an example so you understand what you need to do, what the first step truly is. The first step to creating a portfolio of pairs that can give you a better advantage and a better winning percentage is having a set of rules you trade based on. We call this set of rules, we package it up and call it a strategy. So create your strategy is step number one. For example, we're going to do a strategy where a specific market is under the 200 period moving average. That's our orange line. We come back up to the previous level of structure, support or resistance that was broken, depending on if we're bearish or bullish. And we're waiting on a shooting star candle or a hammer candle. Super simple strategy. Now, here's what you need to understand. When creating a strategy, what we need to do is have very specific rules for every situation. And the reason for these rules is to give you consistency so that you're trading based on the same exact thing every single time. That's consistency. And this consistency will allow us to validate whether or not this specific strategy has worked in the past. And if it hasn't worked in the past, then there's no reason to assume it will work in the future, right? So what we're going to do is create very strict rules. What did we just say that our strategy was? We're looking for a market under or over the 200 period moving average. We have our moving average. It's pretty self-explanatory that under the 200 period moving average means that candlesticks are under the 200 period moving average. So we have that rule over the opposite. We have those rules in place. Now what we're looking for is the market to be trending. And if you've watched the channel for a while, you'll know that, let me get my drawing tool out, that a trending market is a 1, 2, 3 move. How do I clarify 1, 2, 3? 1, 2, 3. We're looking for an impulsive move down, followed by 2 is our pullback up, and 3 is a push and close below this number 2. Now, we have to define our swing levels. The way I do that is I need a 2 candle up from a swing low to be a pullback or to create this as a swing low. What I mean, we have our impulsive move down. I would need a 2 candle pullback from a swing low. Right here's a swing low. I need 2 green candles pushing up, and then I need a break below that swing low. At that point, I can say we're in a downtrend. So what we're looking for is a market below the 200 period moving average or above, depending on the direction. In this case, we're bearish. We're looking for that 2 candle up, pullback, and then a break of that structure level. And at that point, we're saying we're in trend. If we're in trend, then we're waiting for a move back up to that previous support level. And what I like to use for this specific rule, if we're coming back up to that support level, bearish again, then I will put a box that goes from the body down to the wicks. Here we have, excuse me, here we have the close below our previous swing low with our red candle here. After that close below candle, we're waiting on a pullback up to our zone, and we want to see a shooting star candle in that zone. Do we get that here? Yes. So what we've done is created a set of rules. Now we have the set of rules for our entry, which means we have our conditions set, market below the 200, and in trend, our 1, 2, 3 move. That's our conditions. Market must pull back to previous level of structure. That is our conditions. Our entry reason is now set. We have a shooting star candle as an entry bearish, a hammer candle as an entry bullish. We now have one more rule to set, and that is stops and targets. For simplicity, we're going to use a 1 ATR set stop above our entry candle and just 1-to-1 risk reward, just to make this extremely simple. But if you want to, we can make it simple still and say a 2-to-1 risk reward. So we're going to use this, and we're going to say our entry was our shooting star candle. Right there's our entry. We'll go ahead and pull our stop loss down, go above that entry candle by 1 ATR. The ATR at that candle was 12 pips. Damn, the New Zealand dollar was moving slow at that period, wasn't it? 12 pips. Had to stop for a second and make sure that was actually correct. 12 plus 7 is going to be 19. So 19, and we would set our target. What did we say? A 2-to-1 risk reward. So that's exactly what our trade would look like. And the power of this is not that we have this super awesome strategy right now. Again, this is just a sample of a strategy. The power of this is the consistency it creates in your trading. Imagine that uncertain feeling you have every time you place a trade going away completely, because you now have a set of rules. This set of rules is something you can place trades consistently based on. But this set of rules, I should retract that. Don't go out and start trading this. That's not what I mean. What I mean is when you create a set of rules that give you an advantage over the market, then you can place trades based on that set of rules consistently. If you want to take this sample strategy and back test it, which is step number 2, step number 1, remember, we just created step number 1. You can write those rules down. Step number 2 is to take these rules and test them historical data, look back through the past with these rules that you have that are set in stone. You can find every single trade that was based on these rules in historical data now because you have rules. So find this strategy in historical data every time it happened, test, and see if it gave an advantage. Did it provide a positive ROI at the end of over 100 trades? If so, you now have something that you can take and test and you know is validated, so you can take and start demo trading, and the final step is to go live with that whenever you're ready. But I'm getting a little ahead of myself. Let's back up again. We have our rules, and right now, let's say we test this on the New Zealand dollar and we have a positive ROI. If we have a positive ROI here on the New Zealand dollar, then that tells me that this strategy works well on the New Zealand dollar. And at that point, if someone asks me, Stephen, what's the best currency pair to trade with this specific strategy? I can say one of the best is New Zealand dollar. It gives an advantage over the market. You see how it's not generalized anymore? No one's just, if you're not asking me just in a general sense, what's the best currency pair, then I can help. If you go, what's the best currency pair for this set of rules, then imagine you're asking yourself that question. because you have the capability of doing all of this. I didn't do this just because I'm great at trading or anything like that. This is something you could make up a set of rules. You could go back through historical data and do it. This takes a shitload of work. So trading takes a lot of work. That's just part of it. If you came in expecting it to be easy, you're in for a huge wake-up call. But if you came in understanding that work's involved, then you have an opportunity now to really increase your winning percentage and increase your ability to be a good trader. And this is how. You create this system, like what we just did a sample of just now. And since it works on the New Zealand dollar, I would go through and test those same exact rules on every single currency pair. Out of all of those pairs, I would pick the ones that gave the best ROI and the least amount of drawdown combined. So if you go through and you test all these currency pairs and you have a few that give, let's say a 60%, well, with a 2-to-1 risk reward, probably be closer to a 50%. You have a few that give a 50 to 55% chance of winning. Those few currency pairs are the best currency pairs to trade with this specific strategy. And that, my friends, is exactly how you find the best currency pairs for you to trade. Remember step 1. Create the strategy or system, or take and use this one. I don't mind. Take and test this. It may turn out profitable. It's got good common sense behind it. We're looking for a strategy where the market's below a moving average, in trend by a 1, 2, 3 move, a good candlestick entry pattern like a shooting star at previous structure. It's got all the makings of a good strategy. It may be profitable. I've never tested this specifically. So you can take these rules and test them on a lot of different currency pairs. And yes, it's going to take a massive amount of time, but once finished, you will have this cluster of currency pairs that you know this strategy will perform best on. Do you see what I'm saying? And every single one of these, during the back test you do, when you're looking through historical data, you have to have a large sample size. Above 100 trades is what I normally shoot for. So you want to make sure you have a large enough sample size to where you're getting accurate information. But once you do, it's like counting cards in blackjack, being really good at counting cards in blackjack in Vegas. You get an advantage over these particular markets. Like think about it this way. When someone goes, what's the best strategy to trade in the Forex market? What is the best strategy to trade in the Forex market? How general is that question? Every currency pair doesn't act the same way. So you can't have a general strategy that performs best on all currency pairs. But what you can do is ask yourself, how do I get an advantage over the euro dollar? And then you can take and create 5 different strategies, test every one of them on the euro dollar, and one of them is bound to give you an advantage or give you the opportunity to have an advantage over the euro dollar. And then you can take and do the same thing for every currency pair. And yes, again, I will say this one more time. It is a lot of work. But a lot of work is exactly what's necessary to become a professional trader. And what I'll do now is actually continue this little test that we've done here on the New Zealand dollar so you can see exactly how to backtest, exactly what you would do in terms of trying to figure out whether or not this strategy is profitable on this specific pair. So what we would do is we would look and say, okay, here's our impulsive move down. What are we waiting on to point out a swing low, to validate a swing low? We're waiting on at least a 2 candle pullback from a swing low. Swing low, 1, 2, 3 green candles, boom, that's our swing low. We want to see a close below that level. Boom, close below that level. At this point, we have a red box. We'll just use the one from above right here. And in this area is where we're looking for shooting star candles. Did we get a shooting star candle in this area? The answer is no. We continue to do the same exact thing. Impulsive move down. We're waiting for a swing low, followed by at least 2 green candles. 1, 2, 3, plenty of green candles here. Push up, then a push down. We want to see a break and close below that swing low. That's what we get right here. Because of that, we now can move our box down to right here at our swing low. We're looking in this area for possible shooting stars. This could be a trade, depending on your rules. Does the shooting star have to be the swing high? Or does it not? That's a rule you can put into place or not. It's totally up to you. So that rule, we would have possibly, this is possibly a win, depending on the rules you create. I'm not going to count it though, because that's not how I wouldn't specifically trade in that way. But as we push down, let's go ahead and find our next impulsive move down, which would look like this. Push down, push back up. Here's our swing high. We're waiting for another lower low than this, which happens there. Right here, I drew my line really, really bad. So let me back up. We go boom, boom, all the way down to here. This is our swing low because we have a 2 candle pullback, and that 2 candle pullback does not, or actually it does provide a shooting star candle. Yeah, right there. That was probably a little bit difficult to see, but if I bring down my red box to here and we go over, and actually we got to close below a little bit beforehand. And do we get any type of shooting star in our red box? The answer is no. The next push below is right here. We push below, we break below this swing low, we close below it right here. Once that happens, we move our box down to our swing low, and you have to ask yourself, do we get a shooting star in this area? And the answer is yes. Right here is a shooting star candle, another 2-to-1 risk reward. So this is how you would go through the market and actually test to see if this specific strategy works on different currency pairs. And then you would have your portfolio of currency pairs that are best for you to trade based on your set of rules, based on your strategy, based on the way you trade. And that's what can increase your profit potential. And guys, creating a strategy takes some time, but it's completely doable on your own. But if you want to speed that process up and you'd like to know the strategies that I personally use to trade every single day, completely rules-based just like this, then go ahead and click the link in the description labeled EAP Training Program. If you want to know the zones I trade in each and every week, there's a link below titled Pro Trader Report where I'll send you 3 to 5 of the zones I plan to trade in every single week to help you build more accuracy in your own trading and also help you see exactly how I actually look at the markets. So if you're interested in those 2 things, check them out. There's also some free training linked below. If not, that's totally cool. There's also a video I think would be really helpful for you right beside my face. Check that out too, and I will see you in the next video. Talk soon.